Hey guys, welcome back to the channel, and today we're going to be reacting to...
European markets are crushing America's. Why?
The US stock market is tanking. It's volatile, unpredictable,
When was
and
this?
kind of a mess.
Today.
But over in Europe, things are looking surprisingly solid. The two economies are tightly linked. About a quarter of European stock assets are directly tied to the US market. So normally, when Wall Street sneezes, Europe catches a cold. But not this time. While the US market has stumbled, European stocks have held firm. In fact, they've even outperformed, leaving behind both the US and China. So what's behind this shift? We see two main reasons why investors are starting to bet on Europe. Let's break it down. First up, Trumponomics, and at the heart of it is his
Trumponomics.
favorite word, tariffs. Markets hate unpredictability, and tariffs, especially Trump's tariffs, cause exactly that. Earlier this year, Trump slapped 25% on Canadian and Mexican goods, only to delay them by 30 days at the very last minute, twice in a row. 1 week is a trade
Wait, aren't they supposed to start like today?
Wednesday.
Oh.
war, the next it's on hold. And now things have escalated again. A 25% tariff on all steel and aluminum imports, and another 25% tariff on car imports, aimed squarely at Europe, which is supposedly taking effect later today. When policies change this quickly, long-term planning becomes impossible. Investor confidence drops, and the result is sell-offs and wild market swings. Europe, on the other hand, isn't caught in the middle of this chaos. Trade wars aren't great for Europe either, but there's far more predictability in our continent. EU policies are more stable, and that makes European stocks a safer bet for investors looking for calm in the storm. Also, unlike in defense, Europe holds real leverage on trade. Through the European Union, all 27 countries act as one, giving Brussels the power to push against US economic pressure. While the EU exports more goods to the US, it's American tech and finance giants that dominate Europe. Not because they have to, but because Europe allows it. Push too far and Brussels has options. Imposing digital taxes on Silicon Valley, tightening financial rules on Wall Street, and delaying or blocking mergers involving US firms.
What on Silicon Valley?
Taxes.
When was
Like
that?
what do tax? I guess the Silicon Valley companies need to have like headquarters in Europe or something, you know?
Oh.
So they would tax those headquarters more. Maybe that's what.
And if it really escalates, the EU can unleash its trade bazooka, the anti-coercion instrument. That could mean banning Musk's X, blocking US tech investments, or even withdrawing IP protections, allowing European companies to use US patented tech and software freely. And that
So
brings us to this.
today, Jeff Bezos, he submitted his bid for TikTok. Does that mean he owns TikTok overall or just the US
I
market?
believe overall, yeah.
Overall?
Nobody sells like a part of it. Like I don't what you sell the region? Well, nah, it would be overall, yeah.
Second pillar of Trumponomics, the growing threat of a recession.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition because what we're doing is very big. We're bringing wealth back to America. That's a big thing.
There's absolutely going to be short-term pain. The president's been clear about that. Everyone has. I mean, if you're going to remodel your house to make it better in the end, it's going to be really annoying in the short term when your house is getting remodeled.
And markets are taking notice. Goldman Sachs, one of the most Trump-friendly banks on Wall Street, has already slashed its 2025 GDP forecast from 2.4% to 1.5%, and upped their recession probability from 20% to 35%. Meanwhile, prediction platforms like Polymarket, not an official economic indicator, but a solid gauge of public sentiment, put the chance of a US recession at close to half. For context, that number was closer to 20%.
But he said that's public sentiment though, so that's not like no numbers. That's just how the public feels, I guess. Like polling. I guess the question is, do you think the recession is going to be in 20? And 42% said yes, but that's kind of what do people know about that, you know?
When Biden left office. That being said, the chance of a recession in the US is still relatively low. The normal signs of job loss, business bankruptcies, and corporate profit margins appear to be healthy in the US. And then there's the third part of Trumponomics, his desire to weaken the US dollar. Trump has long argued that a cheaper dollar would make American exports more competitive, giving a boost to US manufacturing and trade. But currency devaluation is a double-edged sword. While it helps exporters, it also makes US assets less attractive to foreign investors, whose returns will shrink when converted back into their home currency. That can put pressure on US stock prices, especially in sectors that depend heavily on global capital. Meanwhile, the euro is slowly strengthening against the dollar, little by little. And while that's not great for European exporters, as it makes their goods more expensive on the world market, it's still a confidence signal for investors. A strong currency, combined with fewer trade disruptions, makes Europe feel economically stable, and stability is sexy. So that is Trumponomics, and it all sounds a bit chaotic, right? Now the true question is Trump playing 5D chess, or is it just plain stupidity? Some investors believe there's a method to the madness. And here's how the conspiracy theory goes. Trump deliberately steers up market uncertainty, causing a downturn. Why? Because it might actually help the US manage its massive debt problem. Just look at the numbers. US national debt is over $35 trillion. To put that into
I don't know how would that help manage the debt though. I don't. So what is he saying? Oh, we're going for default and to restructure the debt? Is that's what the goal?
perspective, you could build 24,000 Burj Khalifas with that kind of money. Picture that on the US skyline.
Wow.
But it gets worse. The interest alone on the debt costs about $1 trillion per year. That's the equivalent of building 666 Burj Khalifas every single year, just in interest payments. Even for the US, that's a lot of money. So what would help reduce the repayment rate? Well, lower interest rates would. And a weaker US economy often leads to exactly that. If the markets tank and growth slows, the Federal Reserve might step in and cut interest rates. That would make it cheaper for the US to refinance its debt and therefore saving billions. But the more likely explanation, this is just Trump being Trump.
That's interesting. I mean, if he did think that far ahead, that's interesting.
I don't see why
Solution
not.
to
I
the-
don't see why not, because it makes sense that when the economy is weak, you have to do to get it going, to get people to purchase again, and to purchase again, you put things at a lower interest rate.
No,
not too far ahead.
that makes sense. It's just kind of, I guess why it's shock and a little unbelievable to me is that his decision making has been rather impulsive than calculated. That's so this move would be calculated. He doesn't seem as a person that makes calculated moves. He seems a person that does decisions rationally.
But I remember his economic plan was evaluated by economics, and they did not like his method and how he was tackling the economy. So I wonder how that contrasts with this plan, like seeing that this, if he was thinking ahead, what are their thoughts about that?
I mean, for the government, I guess for the debt, this would help, but for the regular people who don't really care for the debt per se, I don't know if this is gonna hurt our pockets, but to climb out of the debt, maybe. I don't know.
Because I don't know if the market itself would actually lower the prices for U.S. goods. I don't know if U.S. goods are, products that the people in the country will actually purchase.
Out of other
Over.
countries, right? Because especially if they boycott, as
Yeah.
we see in countries are boycotting American goods, so that wouldn't do nothing. Yeah.
Because
His
I
approach-
don't see a reason for them. Because if you have people outside the U.S., they're boycotting the U.S. So why, as a U.S. company, am I going to lower the prices if I know my competitor is not even participating?
No, not lower. For them, it would be cheaper to buy because the conversion rate. So the price American company would sell the same price, but so for example, if right now $750 is like 700 euros, if you weaken the dollar to a point where $750 is 600 euros or 500 euros, then for them, it's only they basically save 200 euros. So from their perspective, they're saving 200 euros, but from Americans' perspective, it's the same price.
Yeah, and
So, but
people are
you're
not
not-
making more money.
Right, but I'm saying they're not lowering the price though. It's just they're getting, but now people are making more money because now more European companies are buying. It's only 500. It's not 700 no more. Oh,
But they're intentionally not
Right,
gonna buy
that counters
because
it.
they made
Right,
a
yes.
pact to say let's keep all the money within the EU.
Yeah. Yeah, no, that
That
would,
only works if
if there's
there's
no
no,
boycott.
yeah, there's
Yeah.
no
Yes.
boycott.
Yeah. You're right. Yeah. If there's no boycott, that would work. But if there's boycott, that wouldn't change
Mm-hmm,
nothing. Yeah.
mm-hmm.
approach to
That's
trade
unless you have someone who's gonna break the pack, and maybe it
Yes.
can be likely.
Mm-hmm.
has always been blunt and unpredictable. He uses tariffs as a negotiating weapon, not as part of some grand economic strategy. If the markets take a hit in the process, it's probably an unintended side effect, not part of some secret master plan. Before we jump into the second reason of why Europe is outperforming the US, we want to do a quick shout out to the people that made this video happen. Members of this very get to vote on their favorite video. Europeans support independent, EU-focused journalism. Consider joining us on Patreon. Now to the second reason investors are flocking to the EU. The European economy is actually doing pretty well right now, and a big part of that comes down to a surge in public spending, especially on defense and infrastructure. The EU is about to loosen its fiscal rules, unlocking up to 800 billion euros in additional spending across the continent. Germany alone has announced 500 billion euros for infrastructure and is considering another 500 billion euros for defense. This shift has two major effects on markets. First, it's a huge win for European defense contractors, whose stock prices are climbing as governments ramp up military procurement. Second, higher public spending drives economic growth. It boosts demand, creates jobs, and strengthens industries across the board. Forecasts suggest it could increase the EU's GDP by 0.9% to 1.5%, and the long-term impact could be even greater. A strong military-industrial base often leads to breakthrough innovations, just like it did in the US with the internet and GPS. Another promising development is that European markets are seeing a surge in funding for the continent's tech and AI sectors. In 2024, European AI startups attracted a record $11 billion in investments, marking a 52% increase from the previous year. Notable beneficiaries include France's Mistral and the UK's Wave Technologies, both securing substantial funding. Now, we are still far behind the US, but nonetheless, this is a great trend and contributes to overall market confidence, further improving the appeal of European stocks. Here's what I think. This is a huge opportunity for Europe. Since 2008, American markets have outshined European ones, and it would be great to finally start turning that around. But that's easier said than done. Europe still faces some real challenges: an aging population, heavy regulation, and a culture that's often risk-averse. Take investing, for example. Only 10 to 30% of Europeans hold a stock portfolio, compared to around 60% in the US. Most people here park their money in property or government bonds. Safer? Yes. But it also means less innovation and slower economic growth. And while I'm really no fan of JD Vance, he's not wrong when he criticizes overregulation, at least some of it. We've got the GDPR, the AI Act, the Digital Services Act, the Digital Markets Act, and so on. But where are the European tech giants these laws are meant to regulate? Nowhere in sight. Before regulating the future, we should be building it. Nonetheless, this could be Europe's golden age.
Well, I guess they're regulating the American companies, not European, but he's not wrong. Yeah, the regulation doesn't help, but it helps protect the people, I guess, as we have seen in other videos. Europe is more about protecting the people than corporation growth. That's just kind of been how they're, playing this. So fits their game.
Let's invest in our continent and decouple from over-reliance on the US. Throw in a bit of EU reform and a united foreign policy, and we'd be in a very strong position. I really hope for the best.
All right, let's see the comments. Go Europe, this is a golden opportunity for our continent. The US start to act the Lulu, the EU, you know what? I'm a superpower. As a young American planning to have a future in Europe, I look forward to the possibilities opening up. Greetings from Finland. We are also part of EU in case you meant to highlight EU countries in Europe. Oh, shade. So far, Trump has managed to unite the world like never before. We see China, South Korea, and Japan coming closer despite having 1,000-year-old beef with each other. We see EU coming closer together and becoming more powerful in the process. Say what you want about Trump, but so far he has helped us a lot. Well, he's helping everyone but America, it seems like, huh? Elect a clown, expect a circus.
Wow. Guys, of course, let us know your thoughts. Don't forget to like, comment, and subscribe. Join the Discord. And as always, share as much kindness as possible.